Konnichiwa. Hi, nice to see you all. I'm always so excited to be here at a Monex event. I'm so honored to be the people who are changing Japan. We've come a long way. We've had a great year last year. Companies across the board improved their metrics, the market reached new highs, and you, individual shareholders, voted more than ever before. So revenue is up, profitability is up, ROEs are up. What used to take us and used to take me and used to take Oasis 6 years to do in terms of engaging with the company is now taking less than a year. More boards have a third of the board is being independent directors than ever before. Almost 16% of the companies now, majority of the board is independent. More companies have independent nomination committees. Our next challenge is going to be making sure those nomination committees actually work. Well, we'll talk more about that in the next couple of months. Diversity is up, including having foreign directors. Diversity in terms of gender diversity is up. And over 90% of companies now have English language proxies, which helps bring foreign investors into the market. And that's one reason the market had such a strong January. There's more inflows from foreigners than almost the entire 2023. Shareholders are getting more active against underperforming management. There's been a record of 69 shareholder proposals in 2023. I think there's going to be even more in 2024. And the world is starting to notice. Even an onshore ETF, that's a China onshore ETF, has Chinese investors who want to go ahead and invest in Japan, and they're paying a 14% premium to invest in the market that you and I can invest in at zero premium. And yet there's still a lot more to be done. And all the companies that we engage with, we offer them three options. Option one is to go ahead and improve on your own. And we give them detailed plans of how to improve. Option two is to do an MBO and improve privately. Or option three is go ahead and be bought by a public company and let somebody else do it. And option two in those MBOs, it's either improve privately, or sometimes it's just choose not to improve at all, but that's fine as long as they pay us a fair price. The key, though, is to paying us a fair price. And so when the company improves, we get to all participate if they choose door number one, or if they choose door number two or number three, it's really, really, really important they pay us a fair price for our shares. Otherwise, it increases the cost of capital for everybody and increases the value trappedness of Japan. It hurts individual shareholders that don't pay us a fair price. And so what would happen when they don't pay us a fair price? They don't have a go shop. They have an unfair valuation. They don't include synergies, and there's no independence of the special committee. And so some of that abuse continues. But let's first get to why it's important. It's important because there's more MBOs than ever before. To some degree, that's because of the additional fear of management of getting booted out. That's because you and I are holding them accountable than ever before. And so now MBOs are at an all-time high. And that's because you and I, shareholder activism, including us and all of us, intensifying government pressure, increasingly rigorous listing requirements, the cheap financing that's available to companies to go ahead and buy their companies or buy companies, the succession issues that exist, and are holding accountable or holding account management to not have nepotism and not have management go ahead and just install their children and their grandchildren be presidents of the company. We want the best quality management there is, and sometimes avoid hostile takeovers, which is now coming to Japan. And so you've seen all the different MBOs in the past year, and Aoki and outsourcing and Shidax and Taisho. We'll talk about one or two more of these later. And I think in 2024, there's even going to be more. And so there's METI and TSE specific guidelines trying to protect all of us as minority shareholders and MBOs. And that's the 2019 Fair M&A guidelines. That's the August 2023 guidelines for corporate takeovers. And that's the continued improvements and regulations by the TSE for companies to go ahead and improve their own businesses. And so you can see here in the 2023 guidelines, they encourage they actually encourage boards, or they say boards, that if you have a bid for a company at a premium, you have to evaluate it. You have to evaluate it based upon a quantitative measure. You can't say, oh, it doesn't feel right. No, this is a big sea change of M&A in Japan. And likewise, in 2019, they have specific carve-outs for MBO transactions, saying there's a potential threat that priority is given on the interests of management, directors, employees, and others over shareholders' common interests. And so they point out that MBOs are a particular place for abuse, or particularly possible place for abuse, and you need to make sure that we're not abused. And so the fairness measures would include an independent special committee and independent expert advisors, market checks, majority-minority conditions, information disclosure and enhanced transparency, elimination of coercion, and sharing the synergies value with shareholders. And the TSC is also urging companies to improve valuations, asking for action plans for companies to raise their values above 1x price to book. So far, only 40% of companies have responded to that call. We think more will. But this pressure by METI, this pressure by the TSC, this pressure by the FSA, and the pressure by all of us as shareholders are causing companies, trying to get companies to achieve mid and long-term growth. That's great. That's great for the market. That's great for profitability. And if you don't want to do that, then fine, you can go ahead and do an MBO. And so it allows companies either to improve themselves without our scrutiny. It also enables them to not worry about tougher listing requirements. Yes, and escape our pressure. So let's talk about Taisho Pharma, the largest MBO of this past year, a company that I've been a shareholder of record on for a long period of time. We've been a shareholder for a long period of time. It's a big company, 733 billion yen market cap company with over 6,000 employees. They make products you all know. They make Vicks cough medicine, Lipovitamin D. They make lots of things that you know, cosmetics and health foods. And yet, under President Akira Ohara's leadership, the stock has dramatically underperformed both Topics and the Topics pharmaceutical benchmark. Price to book ratio is at a big discount to 1x, trading at 0.58 times before the takeover MBO bid, and EV/EBITDA as well was extraordinarily low at 4.66 times. Its ROE has been shockingly low. It's going to be under 5% for 5 consecutive years. Operational performance is not great either. Sales have shrunk. The company is losing revenue and profits. The marketing of an energy drink that started in 2015 failed, and they terminated all sales back in 2022. We've not seen them market another energy drink. You'll hear from us soon enough in the next 2 months, talking about another company that we're engaging with who need to improve their marketing. And unless they dramatically improve their marketing in the next couple of months, we'll be talking about it with you, because that could be a great company, but they're failing to engage and they're failing to improve themselves. Taisho also has substantial cash and cross shareholdings, which actually means that its price to book, real price to book, is even lower if you count cash and cross shareholdings at 1x. And so they go ahead and make a headline that they're buying it at a 55% premium. That looks like a large premium, but that's not right. It's actually unfair because the price, as we said, is massively underperformed. We think that this is really around the company trying to go ahead and manage their estate issues and reduce their estate taxes. And so in this transaction that is going to have an EGM date in the beginning of March, where you and I can vote at and vote against that, they're planning on squeezing us all out at what we think is a far too low a price, with an unfair valuation, with a nepotistic management team that's now going to be 4 generations in the same family, with a board that we believe is not independent, and there's a long-standing relationship with SMBC, who's providing the financing of the MBO, and from whom one of the special committee used to work at. So as I said, the price is far too low. The price to book ratio is at 0.85 as the headline number. We think that the company should be taken over at least 1.1 times price to book, and at least 11,000 yen. I actually think it should be a lot higher than that, based upon our DCF projections. Now, that's fair, a DCF projection, not a DCF projection we'll get to in a minute, where they went ahead and invested all the cash and don't show us a return on that cash, so they make cash disappear. Instead of the tender price that they're tendering and privatizing the company at of 80,620 yen. Yeah, a substantial premium. They owe us all a substantial premium to the price they're paying. And so in their DCF calculations, they show EBITDA going up, but they show cash flow going down. Cash flow is how you calculate DCF. It's going down because, as a director told me a couple of days ago, oh, that's because we're investing for the future. First of all, the giveaway was that we're investing. He was a director of the company, voted for the transaction. It sounds like he's going to be continuing with the company. But not only that, they're investing the cash, so they're reducing the value of the DCF, and then they're showing a 0% growth rate. So we don't get a return on all that investment. Not only that, the company's going ahead and buying these non-operational assets. We can't be clear at all because they don't have any disclosure on it, on what the value they're doing of these cross shareholdings, what's the value of the non-operational assets that the Uehara family sold to the company, and we think completely inappropriately sold to the company. I mean, what is an OTC drug company doing buying the Shimoda Central Hotel, which they bought from the family, which was bought actually, which was a project built by a company owned by the Uehara family, Taisho Services Sangyo, constructing the company. It was Mrs. Koeda Uehara's dream to build a resort hotel in her hometown. She was the mother, she's the grandmother of the current president. And so she built her dream, and then she got Taisho to go ahead and buy the company. Another inappropriate transaction. Why is the company buying this business that's 3 hours away from the Taisho headquarters? Oh, because it's 5 minutes away by car from the Uehara Museum. That's the museum owned by the family. Nothing to do with the company. The business makes no money. That's extraordinarily low return on invested capital. So it's generated no meaningful profit so far. Here's other examples of other non-operational assets bought from the family. Here's some miscellaneous land on Konbini. Here's a whole lot of other 27,732 square meters of miscellaneous land bought from the family's private company, including sushi shops and coffee shops and ice cream shops. And you can see all this different land bought. Yeah, there's another one. Here's a Konbini. Here's a parking lot. Here's some land right outside of the Uehara family's house. So why are they buying it? Did outside directors really do their job to monitor this? Oh, not only are they buying real estate from the family, they're also selling prime real estate to the family. Did they get a fair price? Were really the family the highest buyer for this piece of land in Shinjuku? I doubt it. I mean, you can see here the nepotism. You see the 4 generations of family involved in executive positions at the company. And we think the real reason behind the transaction is around estate planning, because Soji Uehara owns 9.4% of the company, is 96 years old, and they're trying to figure out how to move the shares to the next generation while managing for estate taxes. And you can manage a lot for estate taxes when the company is private. And so the approval rating for the president continues to go down. That's another reason, because they want to avoid accountability for failing to have a decent ROE, accountability for cross shareholdings, accountability for trying to hire the best in management and not just passing it on to your family. And so actually, it's not that high a premium at all to where the 10-year stock price average or the 5-year stock price average. It's only a high price to the very recent stock price average. As I said, people are voting more and more against the family. As you can see here, in 2023, all these asset managers voted against the management, or voted against Akira Uehara's reappointment. You have guidelines from ISS and Glassdoor, so they breach the ROEs under 5%. They only have 2 outside directors and not a third of the board. They does not include 1 female director. They failed on the diversity test. And so most shareholders are expected to vote against President Akira Uehara, which means their easiest answer is go ahead and MBO the company. And so the IR continues to had room for improvement, dramatic improvement, which brought down the stock price. And we believe the Taisho Special Committee, who signed off on this transaction, is not truly independent. They might be technically independent by the technical rules of the TSC. But come on, IR-san was a counsel of the Uehara Memorial Families Foundation. So he worked for the family. Matsui Sensei is a founding partner of the law firm, which is a regular legal advisor to Taisho. And Tsukuda-san work for Sumitomo Bank, of which you'll see lots and lots and lots of transactions with the company. And so we think 3 out of 7 members of the board are part of the controlling O'Hara family. And Kuroda-san, Watanabe-san, and Kitatani-san all work for Taisho under President Akira O'Hara. And they supported the tender. Here's a deep relationship with SMBC. That includes leasing land to them. That includes the SMBC representing O'Hara family as a buy-side advisor. That includes providing financing to go ahead and do this. And that includes having sent bankers in the past to Taisho O'Hara's family foundation. There's a long and deep ties between the bank and the family, including have a former employee of the bank signing off on this transaction. So these are all examples of people who worked at Sumitomo Bank who now have positions at Taisho, now or did have positions at Taisho or the family's foundation. Check this out. It's really, really, really extreme. And so they state in the tender documents, the reason for this is the fundamental review of the sales structure. We think it's really just to maintain control of Taisho. They say it's to leverage productive management for stable long-term production of high-quality products. By the way, every single one of these reasons for the MBO in the tender document, they can do as a public company. We think it's really about succession. We think it's about continuing nepotism. We think it's about avoiding strict monitoring of related party transactions. We think it's fear of getting a very low approval rate at the AGM. We think it's about a failure to achieve an up 5% ROE. And most importantly, we think it's about estate planning. Right? They talk about it's a fundamental review of personnel systems. Great. Do that as a public company. New drug development. Great. Do that as a public company. Investments to expand a product portfolio. Great. Do that as a public company. Staying listed is likely to become a stomach block to implementation of medium and long-term measures. We're a long-term shareholder. We're not all of us are not a stumbling block to implementation of medium and long-term measures. And the cost to maintain the listing of the shares, come on. It's a big, big company, and there's very little cost. The only cost is if you want to go ahead and continue abusing minority shareholders. So measurements not taken to defend minority shareholders were no independent special committee, no independent board resolution, no majority minority, no fairness opinion, no valuation by buy-side advisor, no valuation by the third-party committee. They paid a success fee to the sell-side advisor, which I think is highly inappropriate. It means that they only get paid, or they get paid an additional amount of money if it's successful, as opposed to just giving a fair valuation. There's no market check. And they didn't do any comparable companies, of which we showed them numerous comparable companies. And there's no sum of the parts analysis. So we agree with Japan Catalyst Fund, who said, we hereby express our concern that the special committee, which is intended to be the last bastion for the protection of minority shareholders, may have not functioned appropriately in this MBO. We agree. It doesn't look to us like they did act appropriately. And we're very concerned about it. So what's at stake? Companies need to follow best practices here, because valuations of all companies in Japan are contingent upon it. Capital to expand Japan is contingent upon it. Capital to go, your returns of your pensions, returns of your equity holdings, returns for your next generation, for your estate, are all extraordinarily dependent upon companies adhering to best practices. They should have an independent special committee. They should have independent expert advisors. They should have market checks. They should have majority minority conditions. They should have information disclosure enhancement of transparency. They should have the elimination of coercion to make us sell at this price. And they should share the synergies with shareholders. And so what can you do? You can go ahead and vote against this transaction. And you can go ahead and speak out loudly to decry unfair MBOs, because fairness matters. That's what the valuation of Japan is all about. That's what capital is all about. And your vote that has already achieved so much in 2023 in getting companies to improve their profitability, getting the market to come close again to its 1989 highs, getting Japan to be back is really, really, really important. And so I encourage you to continue doing what you're doing, voting, to continue doing what you're doing, speaking out, and continue doing what you're doing to help all of us engage with management to create a better Japan. Arigatou gozaimasu. I hope to see you next year in person. Thank you.